Hey everybody, it's Mark Arnstein, Remax Hallmark, and of course livingnorthtoronto.com. This is vlog number 112, and today we are doing a mortgage update with my very good friend, Mr. Peter Puzzo from Dominion Lending Top Producers. I thought today would be really important to talk about what's happening in the mortgage world and mortgage financing because it is a very important topic, especially for those who are in real estate. And as you all are aware, that the Bank of Canada has raised the overnight lending rate by 1/4 point to 4.75, which is either going to have impact, may not have impact on what's happening in the housing market. So what better source to get all of our information from than my very good friend, Mr. Peter Puzzo from Dominion Lending Top Producers. Welcome, Peter.
Thanks for having me, Mark.
My pleasure. So they raised the rate 1/4 point, which is basically kind of came out of left field for a lot of people based on the numbers, what was coming out there from inflation and where we were going. So what was the impact immediately of that 1/4 point raise in the market?
So yeah, the GDP numbers came in stronger than expected, and there was an uptick in inflation. So the Bank of Canada appears to be in the what we call a tightening cycle again, where we may see a one or two increases again just to push some downward pressure on inflation. As a result, prime rate at all major banks is up 1/4 point, so we're now at 6.95. Variable rates and line of credit rates in turn are 1/4 point higher. Coincidentally, we saw fixed rates push up 30 to 40 basis points across the board as the bond market moved. So best 5-year fixed today is around 5.19%. And if you're a variable rate customer, you're going to see your borrowing costs increase slightly.
Right. So then basically what's going to happen, I think, right now is that there's going to be another push again in the market for the people that have their pre-approvals that are done.
Yeah.
So that they're going to want to try and take advantage of the rates they have there, which are going to be lower, to try and get their purchases done prior to the pre-approvals expiring.
Yes. Yeah. Ironically, whenever there's rumors or hints of a variable rate increase, there's actually an influx of pre-approval requests, even though there's no direct correlation between variable and fixed rates necessarily.
Right.
It does pick up the phone volume, so it's great for us. But yes, those clients that got pre-approved last week, for example, are now 30 to 40 basis points ahead of the game. So there's certainly a vested interest to buy in that 4-month window.
Right. But with that being said, historically, I go back and I've mentioned this before, like in our previous conversations that we've had. When I bought my first place a long time ago, I had 6.25% on a 5-year fixed there, and that was back in the late 90s, yeah. Right? So given where we are right now, if you're saying at 5.19 for a 5-year fix, it's really not that bad. I mean, we just, again, I go back to where we were overly spoiled in artificial rates during COVID, and that now, and we've seen this in the marketplace, right? We've seen, and I'm sure, where properties are back at selling again in multiple offers, and we did a vlog about this a little while ago. We're saying that multiple offers are definitely back 100%. There's virtually little to no inventory out there. I mean, Toronto is operating right now in a 1-month supply worth of inventory, or just slightly over. So again, what that means, if no new listings were to come onto the marketplace, after a month and a bit, we'd have no more listings.
The average person would argue what we paid at 6%, because my first mortgage was at 6% as well.
Yeah.
They're gonna, and that was in the year 2000. They're gonna argue, yeah, but what you bought, your mortgage was half or a third of what someone's mortgage might be today.
But then the counter argument to that would be that the incomes are much greater than
we would hope.
For most people, and again, I think, I look at this and go, because it's federal, not provincial, right? And I know that they're trying to crack down on Toronto and Vancouver because those are the two biggest markets in Canada, and try and slow them down to some degree of what they can do. But I mean, I think you're going to have a much bigger impact. Obviously, what you're saying is in your places through most of Alberta, through most of Saskatchewan, through most of Manitoba, through the rural parts of Ontario and BC, where when the average price all of a sudden becomes $600,000-$700,000, then that increase in rate has a massive impact. So then you have a point where you get nothing happening because those guys in those areas can't do anything.
Right. I think at some point there's going to be just a realization that no matter what you do in Toronto and Vancouver, the demand for housing is always going to be far greater than the supply.
Right.
Right. Especially in today's environment where the federal government is pushing immigration. Where's everyone going to land? Toronto, Vancouver.
Exactly.
So you're never going to be able to keep up with that.
So then, with rates being where they are, people are still going looking at those variables, or what?
No, well, I mean, I can't speak for other brokers, but I would assume that that my fellow colleagues in the industry are pretty much in the same boat. We haven't discussed variable rate mortgages with clients for at least 12 months.
Right.
Once the tightening cycle began and we knew there was multiple increases coming, it really didn't make any sense to have variable conversations. And I think it still doesn't make any sense today to have variable conversations. So, the last time we spoke, the 3-year term was like a sweet spot. If you can get something similar to 5-year pricing, that's where I would go.
Right.
And just, at the end of the day, you gotta be able to sleep at night.
Yeah.
And you gotta get a payment that you're comfortable with. And a lot of times, some clients get lucky, some clients get unlucky when it comes to timing renewals.
Sure.
We have a lot of talk has been made about 2026. All those clients from 2021 that are in those 5-year fixed rates sub 2, they got to renew.
Right.
Well, ironically, I have a lot of clients that are at 2.5 from 2018 that are renewing now.
Right.
And it's just they're unlucky in that sense. Just like they were lucky in 2018 with the timing, they're going to see like a 40 to 50% jump in their payment.
What I'm curious to know is like people who've leveraged during 2018, 2019, 2021 to use equity out of their homes, which is done off of the prime lending rate, off of variable. What's happening with those guys right now? Especially guys like say bought property up in Muskoka or Cottage Country, income property. I mean, if it's income property, it's not so bad because you got the income coming in to support the mortgage and the lending part of it. But if you bought something like a recreational property, that might get a little bit trickier right now. No.
Yeah. Again, it goes back to, I think we also touched on this on the last time we got together, was that not all banks are treating variable rates the same.
Right.
So you've got the TDs and CIBCs and RBCs where traditionally you have
that's a lot of C's.
Yeah, a lot of C's. Yeah, you have a flat payment.
Yeah.
So as the rates go up, more of your payment goes to interest.
Right.
And then the media talked about that trigger rate. Well, some institutions have decided to trigger the client, meaning bump the payment, but some haven't.
Right.
So if your payment didn't change, you really haven't felt anything. You're going to see it in 3 years when you get your mortgage statement and you're up for renewal.
Right.
And you owe more than what you borrowed.
Right.
But that's another conversation. But if you're a landlord and you're with Scotia and you've seen your payment go up 50% on an investment property, you may see that landlord say, look, I'm tired of being cash flow negative.
Yeah.
I'm listing it for sale.
Yeah.
Now, what percentage of the population falls into that bucket is small, I'm sure. On the recreational side, Mark, typically the clients that buy something, in the Muskokas are relatively affluent to begin with.
Sure.
So that doesn't matter really. But I'm more curious. It's more about the blue collar landlord who's got 1 or 2 condos and went variable and has seen the cash flow go negative quite substantially.
Sure.
Curious to see if those end up on the market.
So there's another meeting in July. Of the gurus that you talk to and your mortgage people, your conversations that you have, do they think this is going to be a continuing cycle, or do they see this coming a one-time shot and kind of pull back again?
If we've ever questioned the Bank of Canada's intentions in the past, there's really no reason to question it now. So they've made it quite clear that the priority is inflation.
Right.
And it continues to be. And if those inflation numbers don't go the other way, they're willing to hike, knowing that there's a strong possibility that it'll result in some sort of economic downturn.
Right.
And that's the trade-off, right? And that must be hard. I wouldn't want to be in that position where you know that the decisions that you make are going to result in a loss in jobs. People are going to lose their jobs. That's a tough one. But my gut says that July they will stay put,
Right.
and continue to monitor the data as it comes in.
Right. Again, historically, where we're at with fixed rates right now is still realistically or relatively not that bad at all. It's just, again, like I wanted to rate, like we were very much spoiled for a certain period of time where rates had never been as cheap as they ever have been, and they probably never will be ever again.
Yeah.
Into those numbers, God forbid, unless some kind of catastrophic, pandemic happens again, God forbid. But
and that's the only reason why the rates went where they went.
Yeah.
Right. Was because we were in a pandemic. We
Right.
didn't know what was happening. So from a health standpoint,
Right.
so that's you can't have more uncertainty than that.
Right.
So rates went where they went. But like I said, I mean, if we could end up somewhere around 4%, I think that would be a healthy number. But we're obviously a bit off of that right now.
Okay, awesome. Peter, thank you so much for doing this. I really appreciate
pleasure.
it. It's always great chatting with you and getting all
pleasure.
that inside information from you, because you are definitely a wealth of information. If anyone is looking to get a pre-approval, get something done with their mortgage financing, this is definitely the guy you want to talk to. Peter Puzzo of Dominion Lending, top producers. He's absolutely just amazing and very reachable, always amazing service, and helps his clients to the nth degree. And Peter, people want to contact you, the best way to do so is?
Peter at mrmortgage.ca.
There you go, Peter at mrmortgage.ca. Everyone, thanks for watching. Take care, Peter. Thanks again, my friend.
My pleasure, buddy.
And we'll speak to you all soon. Take care. Bye-bye.